What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, we're talking about NVIDIA, ticker NVDA. Now, there's been a little bit of controversy here with NVIDIA. Maybe not controversy so much as just, how do we want to say this? The positive glow has worn off. Just completely awesomeness that they could do no wrong, right? It's not there anymore. I'm sure a lot of you guys have NVIDIA chips. My laptop here has an NVIDIA 980M in it. I got a little Alienware action going on here on the laptop, and then my desktop has the desktop version of the 980M in it, or the 980. I didn't upgrade to the 1080 because I was just waiting a little bit. So I might do the 1080 because that's all about that 4K gaming. That's right, guys. You can tell there's a little bit of nerd in this guy. So I didn't make the step up to 4K yet because then I got to get new monitors and all sorts of stuff, and I just wasn't trying to make that investment, especially since this is the early days of 4K and stuff is not quite there yet either. So it's getting there. It's getting there. But yes, the hype is certainly gone surrounding NVIDIA, and we gotta figure out what's going on. Now remember, guys, a little bit of a delay here, so I see you typing. I'm typing here live, and then every once in a while it takes a little delay for about 30 seconds from when I say something and when you guys get it. So I'm not ignoring you. It's just we're in the matrix. So more about NVIDIA though before we get into it is I gotta find the video. I have a video clip. Maybe I'll find it for you. I was on Bloomberg. One of my first Bloomberg hits was somewhere around here. February of 2016, and I was very bullish on NVIDIA, and I look like a champion now after that. But then I got bearish here, and it's not that I was bearish on NVIDIA like I hated the company. It was just, I was like, well, this earnings, we've gone a long way. Maybe they're going to run out of gas. I went bearish there. It didn't work. Blew up in my face. And then I flipped back to going bullish here, and then that didn't work. So I've got a streak of 2 in a row of being wrong on NVIDIA. So understand that going into this. So I'm looking to redeem myself a little bit. Hoping this could be it. Another quick note. Got a couple emails. Bruno, thanks for cluing me in. Ed, and then who else? Somebody else sent me an email. That when the GBU went out yesterday, forgot to check a box. There's like a usage policy thing on. There's so many boxes. I don't know if you guys post anything on YouTube, but you got all sorts of boxes and stuff that you got to check and click and whatever. And so you save the settings, and then sometimes it doesn't save everything that you clicked. Anyway, long story short, I screwed up, fixed it, so the GBU's up there, and it's all good. Everything is all good. Okay. Now Bruno made money on the NVIDIA. Nice. I think a lot of people did. That was a good one. That was like my first live Bloomberg hit. You could tell how nervous I was then, and then compared to now where I just don't care. Okay. So here on NVIDIA, Zach's rank number 4, sell right now. Let's look at the price consensus and EPS surprise chart. Oh, guys, I forgot my Epic pen. Boom, there we go. Hey, Paul, the good Dr. Paul. Paul, you're in Miami. I'm in Sunny Isles Beach, my friend. Right up the street. Anyway, so here we go. You know the drill. Black line corresponds to the right y-axis. Green arrows are earnings beats. Red arrow, earnings miss. We only have one, really. And then the multicolored lines represent the evolution of our Zach's consensus estimate over time. And you do see that the price tracked up with these earnings estimates, which is good. This is great. This is how it's supposed to go, right? But then now recently, Kurt, you're right, a little bearishness here. And why? We've gone from this exponential sort of spike upwards to now the stair-step growth, right? Which is still great, which is still wonderful here, right? But we got some choppiness recently. So just what you can glean from the chart here, you just kind of wonder, like, why this? Now, I dug in here a little bit. This isn't what I want to show you. I wanted to show EPS, the EPS estimates moving forward. And this we could see on Zacks also, but this goes a little bit more detail and a little further out, so I wanted to use this. And if you notice, first of all, year-over-year change for this year drops all the way down to 4.7%. And that was part of the problem, is how do you justify 120 times earnings or whatever it was. I think it ended up, because it was like 2017, trailing 12 I think is over 100 on the PE. I'll have to double check. Anyway, so year-over-year change has now dropped only to like 4.7% for this quarter. So it doesn't get good again until Q3. And then here in 2019, we're talking a big jump, and that's got to be from, the next set of cards that they've got coming out, right? Because we're not quite there in their cycle. This is sort of these next couple quarters. There's not too much new coming out, I don't think. We're going to still work on the same chip architecture, and then there's a change coming. Now, granted, they've got their hands in a lot of other things, including autonomous cars. I think they got a partnership with Volvo. Tesla's going to use their processor, I think. So these are all good, but that's not this quarter, and that's not next quarter either. And we do know that these quarterly reports tend to have a short, sort of point of view. They don't look out too far. So I don't know. So there's that. Okay, back to readily available information. Detailed estimates page. Right now they are Zacks rank number 4. Sell. They're going to report after the bell on the 9th. What is that? Tuesday, I think. Where am I? Tuesday. Report after the bell Tuesday. Top 20% of the Zacks industry rank. Then look at the revenue growth here. Still big revenue growth for the current quarter. Next quarter drops. Current year overall is not that great, and next year's reeling it in a little bit. And let me clarify, guys. These are still fantastic numbers if we're talking about a larger company. Why did 37 times earnings? Where did I get 100? I was looking at something else, so I want to apologize. 37 times earnings is what we're talking about here. I don't know where I got that 100 number from. It must have been something. It was something I was looking at. It might not have even been NVIDIA, so just ignore my ramble there. But still, when you're talking 37% or 37 times earnings, you want to get a little bit more than 12% revenue growth, right? Don't you? Now the EPS side looks a little bit better. Current quarter, almost 70%. Next quarter, 40%. But the current year number is only 7.98. And then next year is supposed to get a little bit better at 18.92. So I think you're beginning to see why there was, I don't want to call it a bearish sentiment, but just lack of a lot of bulls, right? A lot of bulls. And then the analysts really haven't done much, except for one analyst dropping their estimate for the current year over the last 60 days. But still, the overall magnitude is actually ticking up a little bit here. Ticked up a little bit. Just a little bit, though. And then down for the next year's numbers. So not a lot of bearish activity, not a lot of bullish activity. Just kind of meh. So I don't even know why this guy's a 4. Really, this probably should be a 3. Plus, you got a series of big surprises. So should we expect a surprise? I think so. Now, what's happened to the stock as a direct result of these surprises? And you'll see last quarter we had that sort of negative quarter. I mean, that wasn't even that bad, though. Big time beat. It caused the stock to run a lot, and this happened several quarters in a row. You want to talk about a streak. 11%, 12.5, 11.3, 13.6, 7, and then 25. That's 6 quarters in a row of just big-time moves to the upside for shares of NVIDIA. So no wonder people got spoiled. And what I usually do, it's like I ride it till the wheels fall off, right? And NVIDIA is part of the reason why I do that, because they taught me that, like, you keep dancing with the girl you brought to the prom. And that's what you got to do here, and that's what I should have done, and I didn't do that in October's quarter. I bet against them, and then it changed my psyche for January. So, it's like the trend is your friend until it ends. So you keep on rocking these things until it's not working out anymore. Zacks rankiness, to give you some perspective, we had them in the good graces of the Zacks rank right up until here. Since then, the stock's gone down, but this is because estimates have gone down. Now we got it as a sell, but we had it as a sell in here, but it did go down in there, so I guess it's okay. And then good there. And just so you guys know, again, this Zacks rank, this isn't like us sitting around going like, no, sell it. What we do is we aggregate analyst data. And based on all of this analyst data that we get in on all the different stocks, we compare the relative bullishness on NVIDIA and what analysts have been doing with the rest of the market. That's how the Zacks rank works. So the Zacks rank is really, we've taken everybody and put them in this nice normal curve in terms of bullishness, right? And then this middle part are the 3s. This part's the 2s and this part's the 1s. And we do the same thing. So based on what other analysts are saying, we put together this alien with numbers on it. It's supposed to be a normal distribution, by the way. Activision gave good numbers, huh? Activision, part of Activision has, they got that. Who was it talking to about that? Was that you, Jeff? I can't remember. One of you guys. We're talking about Activision. No. It wasn't. It was Mr. AK Soul. That's right. Who was asking me about Activision. That we were, do I have a beat on them? Do I think it's going to go up? Do I think it's going to go down? And I was saying, part of Activision now is that the acquisition of King Digital, which may have, I'd like to see what those numbers did. And when I think NVIDIA and I'm thinking in terms of gaming, I'm just thinking of who's out there buying these new cards right now. And I don't know if anybody's doing that. No, it wasn't you, Jeff. It was Mr. AK Soul. All right, so did this. Back to technical chart. Now, surprising to me is that we're starting to see lower highs get put in. So you got the rally up to the all-time highs. Tried again, failed again. Sells off. And we've got a little floor put in here at 95s. Lower highs, right? So what do they call this? The descending wedge, right? I think that's what they call this, descending wedge pattern. This is a bearish pattern, guys. It's sellers, trying to push it down here. The bulls win a little bit. Sellers go, okay, let's force it on through again. Boom, the bulls win a little bit. And now we're stalling again. While this happened, this latest push upwards, you had overall negative or selling pressure in the money flows. Now, recently it has ticked up a little bit, and we do have a little cross here. Okay, so there's a cross in the money flow. So there's that. But also, our commodity channel index gave us a buy. That's kind of stalling out a little bit, and now it's coming down again. So overall, technicals on NVIDIA are bearish. Okay. Now remember, that's just part of the process, but they are bearish, and we got to keep these 95s. All-time highs up at 120. We're not going to go $17 out of the money. That's not going to happen. But 95s is what we got to look at to the downside. And then the previous high is 110-ish, somewhere like that. All right, so that's kind of the story for NVIDIA. Another thing that should concern the bulls, is this a gap that's going to get filled eventually? They say gaps get filled. That's all the way down there. Look, 78s, 79s. The bottom end of that gap, let's get the exact one. 78.50. The November gap is the bottom of the November gap. That feels like a long way away from here. But again, they say gaps get filled. So is that attracting the price? Are we coming down there? This could make for a very interesting lotto ticket today. Okay. So there we are. Let's go ahead and dig into the options chain now. As always, side-by-side view. May 12th, because we're going to be reporting on the 9th. Well, I guess I jumped the gun on the calculator. 103s. This isn't the 103s. See, I could just tell. You see this number, and then you go, you know what, bar chart? Give me the correct date, please. I don't know why it does that all the time. See, you're not tricking me, bar chart. Always trying to catch me slipping. I need to find a new options pricing service too. Like I said, I got rid of that active tick because it kept crashing all the time. It was super annoying. It was very cheap though, so I liked it. I'm moving over. Most of my equity stuff is going to be on NinjaTrader, and I'll let you guys know. We might have a deal for you guys so you can try it out or something. Really, the platform's free, but the data is what costs you. Anyway, I need to find something where I can do this much easier. Oh, come on, bar chart. Stop refreshing. Okay, good. Now, 103s. Let me do this again before bar chart decides it's going to reload. 103 call, 475 by 485. We'll call it 480 plus the 103 put is 390 by 4, so that's 395. 875 is the move they're expecting here on NVIDIA, divided by 103, so you're talking 8.5%. Feels pretty good. 8.5% feels pretty good. Yes, you know what? These tech expectations have been a little high, I think, and we've profited because of that. For the most part, selling out of the money calls has been the way to go on a lot of these tech names because they get these lofty expectations, they rally a little bit, and then boom, bottom falls out. All right, 8.5%. That seems pretty reasonable here for NVIDIA. So you're talking, what did I say? 875, 9, whatever. 103. Okay. So basically $9 is what we're looking for here. The stock at 103. So 94s? 94s? I think not. Look at that. They've already kind of showed their hand a little bit because they're saying 94. So they're saying the other side of this support, and we're just going to tick the other side of the support and then come higher? I don't think so, options market. Caught you slipping. Okay. So what do we do? What should we do, my friends? We're going to do what we always do. I'm going to give you credit spreads. I'm going to give you debit spreads. Where's Bill Phillips is here, right? So he probably wants a calendar spread. You guys have been doing very well. I've been getting emails from you guys about some of the calendar spreads you've put on, and it has been great. I think this is going to be, you could probably make money on a calendar spread here too. Okay, forget this side by side. Let's stack it up. Out of the money. Where do we want to go out of the money here on NVIDIA? I mean, 120s is just, ugh. This thing's pricing in 112-ish. We know that the top is 110. You don't have to go to 112. If you want to be bearish on NVIDIA, you can sell the 110s all day. Okay? We can sell 110s all day. Again, I think we can even be more aggressive here, but that's okay. Let's just do this. What if you went out? This is a bear credit spread. Selling the 110, 111. You're going to get a $1.88 for the 110, simultaneously going long the 111. This is the May 12th expiration. Simultaneously going long the 111 call. You're going to get back, you're going to pay rather 160. So 28-cent net credit. That means 72 cents you're going to have at risk. So you can make 38% on this one. And all NVIDIA has to do is stay at or below 110 at expiration on May 19th. So, credit bear short the May 12th. May 12th, 110, 111 call spread for a 28-cent net credit. Now that's a little bit more aggressive than we've done, I guess, with some of the call spreads that we've gone short with. That seems a little tight, right? But I'm using the technical chart to influence where that needs to go, right? So that's the thing here, guys. We always calculate that at the money implied volatility. You still have sort of the human decision of saying, that's too much, or it's not enough. And then use your technical chart to tell you in a little bit more concrete, if that's really going to happen or not, right? Okay. Bulls. Bulls are 95s, remember? Like, it's got to stay above 95. Bulls are 95s. Really? You're going to make me do this? Okay, fine. Show all. They're just not giving me enough strike prices. This always happens. Which is fine. I can't complain. Okay. 95 puts. Look at the 95.50 puts. No, something's wrong. Oh, that's why. It's just a big... This is... little screwy. There's a screw loose down here somewhere with this 179. That's because it's 158 by 199. They're just giving you the midpoint, assuming you get filled there. They're not going to fill you there given what this 96 looks like, okay? That's not going to happen, right? This is free cheese right here, and that's not going to happen. They're not going to give you free cheese. Okay, so let's do the 95. 94. Put spread. So this is another credit spread. So if you're bullish on NVIDIA, what you're saying is, hey, this thing's going to stay above 95 because we see it on the chart. That's where the support's going to be. Don't worry about it. So a credit bull trade is short the May 12th, 95, 94 put spread. And what was the math? If you sell the 95, 158. Simultaneously buy the 94, that's 135. So this is 23 cents. So you can make 23 at risk 77. 23 cent net credit. And all you have to do is make sure that NVIDIA stays at or above $95 at expiration. Good question, Norm. At 28 per contract, how many contracts do you deal with to make it worthwhile? So I'm assuming most of you are on a plan that goes as follows. Like $8 per trade plus what, like 99 cents a leg or something? Plus 99 cents times however many contracts, right? So hang on, actually, so you have to do the 0.99 times, you know, what, you do 10 of them, boom, plus the 8. So it's like $18 a commission on something like that if you did 10 of them. So $280 is what your net credit would be minus, you know, what did I say, $17.9? I already forget. So you get in a couple $100, right? So I guess I'm not here to tell you what's going to be worthwhile to you, right? Because everybody's got their own thing. What I try to do here is I try to give you trades that are like less than $250 for a one lot. I mean, that's kind of my target, my goal. It doesn't always work, right? But I try to do that so that if there are guys out there doing one lots, learning that they could do that. And then there's a lot of you out there that put on 100 lots. So it just depends on the guy. So I can't tell you that. But what I can tell you is you should take a look at your overall portfolio and see what the risk is. So the risk on this trade, right? So on a 28 cent net credit, we said that the risk was what? 72 cents. So that's $72, right? Each one that you put on. So what you should do is you should take your account. So let's say you have $10,000 and you only want to risk like 5% of your account. That's $500, and you divide that by the 72. So you should put on 7 lots, right? Just an example of a guy who would risk 5% of their account on a single trade, right? Now, I know there are people out there that put 50% of their account on a single trade, but that's because it's funny money, right? So again, it's tough for me to answer that question. Whatever is going to outpace the commission significantly. When I put these together, I'm thinking people do like 250, something like that. Anywhere from $250 on up. Below $250, it doesn't make sense, right? I wouldn't one lot a credit spread on this unless you're just learning about it, right? Okay. So here we go. Yeah, and that's good too. A 5 lots, totally fine. You just make it enough so if you lose, you're not going to go to the poorhouse. But if you win, you'll be happy. Okay. Those are my credit spreads. Debit spreads, we're going to the June expiration. What? June? Are you crazy? Yes, I am. And here's why. So all the way out to June, we're not going to get, right now, you're not going to see the 103, the 102 and a halves yet, right? Those are going to come later. Which is kind of annoying, but it's still good. Exact, Dave. Let's stay out of the poorhouse. That's the plan. All right. $100s. And where do we say the top end was? Let's go back to the top end. I said 110, right? 110, 120 is the firm. Well, 110 is really as good as it's going to get, I think, early on. Then it could rally every bit of that. I just don't like that expiration. And I don't want to go just 1 week out. What if we went 2 weeks out? 2 weeks after. There's a little bit more open interest here. This doesn't look terrible. Again, so this, I want to give it a little bit of post-earnings drift. Let it go out a little bit more. See what happens, right? But I don't want to mess around with just doing this like front month, because then we only have 1 week for it to run. Maybe that's enough, right? 10 days, maybe it is enough. All right, I talked myself into it. Let's just keep it in May. And again, we're going to do the stacked view. Here it goes. 103s. So this is the bull debit spread. So going long the 103 call, and I was saying 110. The options market's saying 111. So you guys know what I love to do is I love to say half of what the options market is pricing in. So that would take us to 107. And let's just price this out and see if this is in fact worthwhile. And I think it's going to be. So 107, so the 103, 107 call spread here. What does it look like? So long the 103 is 548. So it's going to cost you to go long the this is May 19th expiration. May 19th, 103 call costs 548. If you simultaneously short the 107 call, you're going to get back 360. So that's 188 net debit here. Now here's the good news. Difference in the strike prices is $4 minus that 188. That means you've got 212 upside potential there. Divided by the 188, you got 112.7% rate of return you can get. And all you need is shares of NVIDIA to close at or above 107 at expiration. And we already know that the 110s is kind of the top of this market in the short term at least. So I'm going to say we'll debit long May 19th, 103, 107 call spread for a 188 net debit. Now, what about the bears out there? We'll do, let's see here, $9. 102s. Oh, $9. Yeah, I keep putting up $8 instead of $9. Losing it. Either way, it's fine. 103. Let me change this so we can actually see what I'm talking about. There we go. 103s on the put side. And I said 95 was the bottom end of that market. Options said 94. Thanks for fixing me, Bill. And then, like I said, I like to do the little trick where we go halvesies, right? That puts us here. I'm going to price out two of these. First, I'm going to price out this one. And then I'm going to go ahead and price out what if we're right and it comes all the way down there. Okay? So the first one and then the second one. Okay. So let's do the first one. It's going to be covered up in this drawing I got going on, but that's okay. So 103 put, it's going to cost me $460. Simultaneously shorting the 98.50 put gets me back $282. So that's $178 total outlay here. Difference in the strike prices here is $450. So $450 minus $178 is $272. On $178, that means you can make 150% here. And all you need is shares of NVIDIA to close at or below 98.50 at expiration. So that was for 150%. And then the 103.95 put spread, very aggressive. But that's still 460 there. You get back 183 for the 95. That's 277. The difference in the strike prices here, though, is $8 minus the 277. You can make 523 on 277. You can make 180%. Now, here's the thing, and I like to visualize this. 150% from here over here, and only another 38% from here to here. When you look at it that way, it doesn't make sense to take on that additional risk, especially when you can get 150% just for the first $4.50, right? So I think officially what I want to do, if I'm bearish, is the 103, 98.50s. And again, spell out the math on that. Long the 103 put, it's going to cost you 460. Simultaneously shorting the 98.50, you're going to get back 282 for a net outlay of 178. So, bear debit long May 19th, 103, 98.50 put spread for a 178 net debit. Okay? There you go. Man, and I just realized I have not been recording this thing this whole time. That's super annoying. Ugh. Okay. I like to record these and use them for other stuff. All right. So there you have it. There's a really nice situation developing there. There's a lot of money to be made on this today or next week, because you can make money selling premium outside of the technical levels. You can make money betting that it's going to take every bit of that move, right? So there's a lot of stuff going on. Lots of opportunities. And since there's that difference between that front week and that next week, you can still make money on some calendar stuff too. Now, I think that this is really going to move on earnings, though. I think it's going to be very reactive. So, what do I think is a lotto ticket on this one? I'm going with the bearish side. I don't know if I made that obvious, but I'm making it obvious now. The bearish side. I think the bearish debit, the put spread, I think is going to pay off, because honestly, I believe that this thing breaks 95. I think it gets kind of ugly. I think it gets down there and it breaks it. I'm bearish on it. So where's my put spreads? Where are my puts? So like I said, guys, if it really gets ugly, it could break this 95. So I think that's almost the way to go. If you use the 95, and went to, heck, we could do 95 90s, 80. Well, the whole point of this is what if the bottom falls out, right? I want to be rich. That's the whole point. So 95 85, I think, is lotto. That's a lotto. Lotto is long May 12th. 95, what is it? 95 85 put spread. What's this going to cost you now? Looks at 158 minus 29 cents. It's going to be 129 for for 129 net debit. 129, and your upside potential is that minus the 129. So you can make 871 on 129, 6 times your money. But NVIDIA would have to go all the way down to 85 for that to happen, right? But I think that's the lotto here. Either that or, yeah, I mean, that's what we're looking at. All right? Okay. Well, there you go, guys. All sorts of action. Now, one comment on the calendar spreads. You could do it. You could put it together. I personally believe here with NVIDIA that it's going to move right away a lot. And I don't want to. And one thing about the calendar spreads is if it does move right away a lot, you are going to limit your upside. Okay? And in this case, I want to be more aggressive, and I don't want to limit my upside. So that's why I think the way to go is the bearish debit. So long to May 19th, 103, 98.50 put spread for a 178 net debit. Earnings is on the 9th after the market closes. All right, guys. So awesome session. Thanks for coming out. Thanks for contributing. Like I said, there's a little bit of delay, so I try to see what you guys are saying and then talk to you, and then it's all good. We are working on getting some sort of forum together. Got some feedback, some emails from you guys helping me out with that, so thanks. And we're going to figure that out, and we're going to evolve this thing into the next generation. Remember, I used to do these like 15 minutes long. Now they're getting a lot longer. Maybe I should reel it in a little bit, but I don't know. We're having fun, so it's all good. So I want to say thank everybody for coming out, and have a fantastic weekend. And remember, let me know what you guys want to do next week. We've got, what is it? Priceline on Monday. So I'll see you all for Priceline on Monday. And that's about all I got. So thanks a lot for hanging out with me at Zach's Live Trader, and I will see you all next week.